Greetings. Welcome to my weekend market recap, 19th August 2023. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co. X handle, X is Twitter, Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems and only Q systems to make my trading decisions. Q has multiple components for technical analysis, sector industry rotation analysis, fundamental analysis, and also market breadth as well as seasonality analysis. All these components run on Metastock platform, and the technical analysis component runs on TradeStation as well. I'll be using all these systems today. I tweeted a while ago when announcing this session that I will be releasing a new tool. Let me explain that tool first before continuing with the market recap. This is what I used to do, and probably many Q traders used to do. That is to keep an eye on the market breadth insights that were plotted on Q Elite on TradeStation in real time. So on the left hand side, the Nasdaq breadth insights in terms of tick, advanced decline, up down volume, and on the right, the NYSE breadth insight. That used to show me which one is stronger, Nasdaq or NYSE internally, not just in terms of the ETF or futures, but internally, which one was really stronger. And then I also kept an eye on the major indexes: Russell 2000, Dow Jones Industrials, Nasdaq 100, and S&P 500. Again, the aim was not to see the ETFs, how they are doing, but the internal health of the market indexes. By keeping an eye on these two sets of insights in real time, helped me decide few things. One of them is, if I wanted to go long the market using the ETFs or futures, which one would I choose? Whether it would be Russell 2000 RTY or Dow Jones Industrials YM, NQ or ES. And of course, I would actually enter the trade by looking at the fine-tuned chart template, but it was important for me and very effective to ensure that if I am taking a long trade in Russell 2000, Russell 2000 future was going up, that was a required condition, but also I wanted to make sure that the internal health of Russell 2000 was strong. So let's spend a while more on this chart. This chart is a 10-minute chart, set of 10-minute charts for the major indexes along with their internal health. This is Friday. In the morning session, I would actually use 5-minute interval, but let me continue with 10 minutes in this session so that I can have the full day's view on this screen length. On Friday, RTY or IWM, both of them, they were the first to break out of early range high and continued to stay there with a much bigger percentage move. At the close also we can see IWM was up 0.54%, DIA only 0.02, QQQ was slightly marginally negative, break even almost, and SPY was also 0.05% up, whereas IWM or RTY was up the most. So that was at the close of the day. But if you kept an eye on the fine-tune chart here using 5-minute interval again in the morning session, then you would be knowing that IWM or RTY was the strongest. And if you wanted to trade futures or ETFs for day trading, for example, you would take a long in IWM, not the other ones, because when buying, it makes more profit to buy the strongest one. Now, when you did that, or if I did that, I actually did that, I would also like to make sure that not only the ETF or future was stronger, I also wanted to make sure the internal health of the index was strong. And more useful is the advanced decline and up down volume. You can see for all of them, advanced decline started negative, and for Russell 2000 it turned positive very fast and continued to remain positive. Same for up down volume, it actually turned negative, started negative for all of them, but Russell 2000 was one of the first, probably the first to turn positive up down volume and remained up down volume positive throughout the day. So when we had a buy setup at this point, or maybe even at this point on IWM or Russell 2000 futures, we could visually verify that internally also Russell 2000 was strong enough and stronger than the others to make a buy trade. And that's how I used to use the internal health. And you might have observed, I also observed that some days what would happen, and it is not about yesterday's trade now, it is something that happened recently several times, and recently means not only in recent days but recent months, that Russell 2000 breadth was very positive, not about Friday. I'm just showing an example, explaining one thing. Several times we saw in recent months that Russell 2000 breadth, Dow Jones Industrials, S&P 500 breadth was positive, and if we wanted to know about more broad insight, Nasdaq breadth was positive, NYSE breadth was also positive. However, QQQ was coming down, and to some extent SPY was also coming down. Why was it so? I tweeted about it, I explained it in previous market recaps also. You all know that was because QQQ to a very large extent and SPY to a lesser but considerable extent are influenced by mega caps. So mega caps were coming down, that were pulling the QQQ down, to some extent SPY down, but they had no effect on IWM because IWM or Russell 2000 does not have mega caps, and Dow Jones Industrials is not market cap weighted. So mega caps does not influence it so much. So that was what we all observed. I also observed. However, one of the Q traders, he is trading futures actively, Mr. John. I cannot disclose I don't disclose the full name unless they do themselves. He also observed it and he wanted to have a chart where for intraday session he could see the percentage change of the major indexes and the mega cap, a custom index, you may say. So we already have Q global market breadth. So what I did, I developed one tool that I actually tweeted on my Twitter page earlier. Last week I was testing it out on Twitter handle superior profit, I tweeted on few days this chart. This is to be used only during the day. It is an intraday chart. Intraday chart. This is not to be used for daily interval, weekly interval, or anything else. It is to be used only for intraday interval, and 5 minutes is the suggested interval. It needs more granular data. 5 minutes is best, and you can see the whole day session can be captured by the screen length if you keep it 5 minutes. So 5 minutes is a good interval to use. Right at the open, if you wanted to use it, then you could use 1 minute interval. So either 1 minute if it is right at the open, or throughout the day you could use 5 minute interval. What does it show? It is a chart for market percentage change, major markets percentage change intraday chart that shows how S&P 500, Dow Jones Industrials, S&P 1500, Russell 2000, Nasdaq, and Megacap Custom Index, they are doing right from the open. So this is actually a snapshot I shared at 10:15 a.m. on Friday. Friday was 17th. Thursday. Okay, so Thursday I shared this, and I actually used this chart to take some trades. Let me explain that. So Thursday 10:15 a.m. I am looking at it. I'm looking at it from the beginning of the day, and I saw that the white line was the weakest. You can see that. This is the zero line. Anything above that is positive, anything below that is negative. White line was below the zero line. It was coming down the steepest. So this was the weakest. The white line is the mega cap index. And that was dragging down QQQ also. That is Nasdaq 100. The others were actually positive at that time. All the others were positive. So if you wanted to trade futures or ETFs or options on ETFs, then you could look to trade Nasdaq 100 or NQ on the short side. Or if you wanted to trade the mega caps, you could then look up the mega caps and see which ones were giving bearish charts. And what I did when I saw this, I looked up the mega caps. So I also used to keep an eye on the mega caps using this multi-chart layout. It could be done on QElite or QGlobal. This is QElite on TradeStation. Here I have all the 8 mega caps. I from time to time have the habit of keeping an eye on them. So when I saw Megacap Custom Index was the worst performer, I came to this layout, and on Thursday, let me scroll back to Thursday. This is Thursday for Apple and this is Thursday for AMD. So I noticed that Apple was breaking below early range low and AMD was also breaking below early range low. But that was not enough for me to take any directional trade. I looked up their charts, and I think I shared those charts also on Twitter, if I remember. The more we go back and review the posts I make, the more you and I will have confidence to repeat the methodology. The methodology has to be repeatable for us to have confidence. This was the Apple chart on the same day that I shared, Thursday, in the morning session. In the fine-tuned 10-minute chart, it was coming down sharply below early range low, and in the daily on the left side, earlier it was moving sideways, it was breaking below the sideways range. On the daily there was no Q short setup, so I was not taking it as a swing short trade, but it gave a day trade on the bearish side, that is a early range breakout short setup, and I could take it more confidently. And even before that, I found this by looking at the market percentage change chart, which led me to look at the mega cap. So I took a short trade on Apple. It was a fast trade, not a swing trade. There was no swing short setup in Apple. So I used naked put options. And I think I shared the live charts of AMD also. And sometimes I shared these charts always before knowing the results, but the intention is to explain later on in these market recaps why did I decide to take a trade. And what I saw in AMD, again, right at the time I was taking the trades in the morning session Thursday, that in fact the day before AMD gave a short setup. That is what short setup? Flow trend following short setup. We can see the flow trend following setup indicator in ribbon in Q Global on Metastock, and we had the backdrop bearish for many weeks. So it met all the required conditions. That was the day before, and on this day I could take the short trade as the trade. How I explain is that is the day after signal day. We could take the short one day earlier at the close, or the day before the day after signal day. We could take it using fine-tune chart, and that's what I did. Again, I took it using naked put options. So I explained how I actually used the market percentage chart. Again, it is useful only on 1 or 5 minute interval. It could be used for 10 minutes also, but I suggest staying with either 1 minute in the very early morning just after market open, or just keep it on 5 minutes for throughout the day. And interestingly, thanks to Mr. John for coming with this thought, I find it so useful for deciding intraday trades. Again, this is not for swing trades, position trades, long-term investments. For if you want to find trades during the day for day trading, or maybe if it is profitable, you may hold it overnight. With that aim, this is extremely valuable, and nowadays I am always running it on one of the monitors throughout the day. That is how useful I am finding it. Again, if it is only for swing trading, you don't need this. If it is only for position trading, long term, you don't need it, but it is for day trading, and for that it is invaluable. So this is part of Q Global market breadth. However, this does not require fire. So I am going to make a release available for this chart that will be available to all Q traders, Q Global traders, whether they use market breadth or not, because it does not need fire. No need to restrict it to only people who have global market breadth. So I will release it soon. It is available for the USA market. That is where this observation is most effective, because in the USA market, the mega cap tech stocks heavily influence Nasdaq. To some extent, it influences SPY, does not influence Russell 2000 or DIA. So that is a tool that I'm going to share shortly. Okay, now let's come back to our regular market recap. Let's look at US dollar. US dollar stopped right at the trend line resistance in both daily and weekly, and these resistance support trend lines work beautifully. Again, I will show how it helped me decide market direction, my preferred trading direction again this week. But these are very effective, and when it is stopping right at weekly daily resistance, that may be a bullish sign for the market, because if it comes down, that will be bullish for the market. If it comes down, but will it come down? We don't know, but we have some other signals other than the resistances. That is, we have a bearish indecision at the top. Now let's look back. These look backs I find are invaluable to build confidence on the technique and the systems. When we had jump thrust low at price extreme low and big move up 3, in that market recap I explained why I am going to be bullish on DXY, that is the dollar index, and that would also mean a reason to be bearish on the market. But now it is at trendline resistance with bearish indecision. That is a reason for me to be at least neutral, maybe slightly bearish on dollar, and therefore more bullish on the market. So I want to keep that in mind as I go forward. There is some reason from dollar index chart to be at least not bearish on the market, maybe bullish, at least not bearish on the market from dollar perspective. Okay, let me not uh, look at the global markets because I already spent some time on the new tool, but I will look at Nifty 50 of India. I follow posts regularly on both India and USA markets because I trade on both of them very actively. And let me look at Indian market. When it displayed the bearish headwind right at the very top, soon from after that I started shorting, and most if not all my Indian market ideas shared publicly before knowing the results were on the short side. But on Friday I noticed there is a bearish, sorry, not bearish, on Friday, and there is a bullish indecision at the low and prices at the yellow direction line. So I became neutral on the Indian market, not bullish, because there is a trend line resistance nearby. I need that resistance to be broken to become bullish. But I became neutral because it came near support. The yellow line is a robust support and it displayed a bullish indecision. And now look back again. We had the bearish headwind. We had jump thrust high at price extreme high, then came big move down 3. That was a reason to be bearish. And I not just explained this in the webinar, I actually trade on it. So I made quite a good profit in India by shorting multiple futures option during this period. But now I am turning neutral, and I think many times I am ahead of other traders. So the others may be turning bearish now, but I turn neutral. USA market is similar. Look at let's go to Q Elite on TradeStation. Let's start with SPY. This is SPY on Q Elite on TradeStation. Jump thrust high, price extreme high, came big move down 3. I was bearish from here onwards, and I shared that publicly. All my ideas were bearish since then. Remember, first I moved to high dividend value stocks at low price level. Foot Locker was one of them, I remember. And then onwards, all were on the bearish side till Friday. And I see many people are turning bearish, but on Friday I turned bullish in the market, not neutral. For India, I turned neutral, but for USA, I turned bullish. One reason we saw was from the dollar index chart that had some reason to be neutral or bullish on the market. And now this is SPY. SPY, the color of the candle in both daily weekly are still bearish. However, if we look at the momentum chart, this is the third daily chart I use sometimes, we have this dot which is the green candle low. That is a reversal candles that happens after price has dropped significantly. Now if green candle green candle at a very low price level comes in only one instrument, it is probably not that significant. So it came in SPY. why don't we look at it using a radar where I can see for SPY, QQQ, DIA, IWM, what can we gather from this green candle low? Out of the 4 market ETFs, 3 of them, that is SPY, DIA, IWM, 3 out of 4 gave green candle low. So now it is not one symbol anymore. It is 4 symbols. Sorry, 3 out of 4 symbols, and these are market ETFs. That is a reason to be bullish in the market. Does it mean I will have many bullish trades? Probably yes, actually, and I will look at them, at least at some of them. But now this is market ETFs, right? What if I looked at the green candle low for the liquid stocks? I only trade liquid stocks. I suggest not to trade non-liquid stocks. Not worth it in my view. If you are trading with significant amount of money, reasonable amount, not has doesn't have to be high amount. It's better always to stick with the liquid stock. So Q Finder actually shows us the green candle low as a percentage, and we have unbelievably high percentage of stocks displaying green candle low, 30%. And when this percentage hits a certain threshold, we actually have this cell lit up. So we are alerted green candle low is at alert threshold, much higher than the alert threshold actually. So that's a reason to be bullish. And we have a unique reversal signal, the headwind reversal signal that comes at the very low, that has also hit the threshold level. That's when this cell lights up with green. So we have yet another reason to be bullish. And in terms of, if we are here, let's read the Q Finder technical breadth. 85% of all setups on Friday were bullish, 71% of strength setups, 82% of trend continuation setups, 99% of reversal setups were bullish. That is a reason, certainly this chart, just looking at this chart, it's enough to turn bullish on the market. That is today, right, at Friday's close. What about previous weekend? That time I was bearish. I was bearish for several weeks. And again, I want to go back to showcase the effectiveness of this 360 degrees analysis. Let's look at Twitter. I tweeted last week's weekly technical breadth. This is as of 12th August. Last week's in the market recap I shared it. That time my view was bearish, and you notice that all categories were bearish. Is look at the all categories, 65% were bearish 1 week ago. What is this week's status? Let's go back to Q Finder. From 65%, 93% of technical breadth weekly picture is bearish. So it indeed came down a lot, became much more bearish from 1 week ago, and I was already bearish, so I could book significant percentage profit in my trades. This weekly picture is not only bearish, this is as of today, it is actually oversold. And in the oversold weekly technical breadth, we saw huge reversal on Friday. That is enough reason to turn bullish on the market. So green candle low was not the only reason. Headwinds were another reason, and the overall technical breadth on Friday was another reason. But that was not all. Let's go back to the technical charts. SPY is this one. Let's go to QQQ. I'll spend more time again on the market. QQQ also bearish in color in both daily and weekly. It recovered considerably from the open but closed slightly lower. You can say it's almost at break even. Okay, what about DIA? Now we see more reasons to turn bullish. Dia stopped right at weekly as well as daily trend line support. Those hold very well. These trend lines hold very well, so that's a reason to turn bullish. And IWM was the best performer. It was the worst performer for many days, but on Friday it turned the best performer. And where did it stop again? Right at the trend line support in both weekly daily. That's again, those are reasons enough to turn bullish, but not all. There are even more reasons. Let's look at the futures symbols. At ES, some some movements are not shown on the ETFs because they are not 24 hours, but we can see in the future we can see some more insight from the future symbol, that is the bullish indecision at the low. I'll be happy to see a cluster of that indecision, but in absence of that, that is telling me to be at least neutral. NQ, we also have a bullish indecision at the low. YM, like Dia, YM also stopped at trendline support, and here we can see an additional reason to be bullish, that is a bullish indecision at the low. And RTY, the IWM equivalent futures, also the best performer, this also has a bullish indecision at the low. So we had many reasons to be bullish, and I am now bullish on the market. As of Friday's close, I have no short position. I have some long positions, at least one. Why I say at least one? Because that is the one I shared publicly. That was Pfizer, PFE. I'm holding that. Now look back once again, right when it came to the weekly trendline resistance, 1, 2, 3 weeks in a row, it could not go above the trendline resistance. And in the weekly, we had a bearish headwind. Then immediately came bearish flow. I turned bearish from that time. Perfect timing, I may say. And now IWM is at support, Dia is at support. I'm using the trend lines again instead of resistance. Now I'm using support. I turned bullish on the market. I will look for, I have a few stocks in mind to buy. I look for how the market is moving on Monday, and if they are going up, I'll use fine tune charts to buy them. I'll look at some of them, but let's continue with the market level analysis. This is another invaluable piece of the insights that help me decide preferred trading direction. That is the sector industry stock advanced decline breadth from 1 month to 1 day and during market hours in real time. On Friday, this last column was showing real time performance, and I saw this turning bullish right from the open. Though mega caps were coming down in the beginning, later on mega caps recovered. Though mega caps were coming down, this picture was bullish from the very beginning, and that was one reason I started to book profit in several short positions that I publicly shared earlier, including XHB, the home builders ETF. Incidentally, my home builders ETF naked put option hit 100% profit in a few days. And when it hits 100% profit in a few days, I always like to book some profit. So first I booked partial profit, and then when I saw market was recovering so well that my preferred trading direction was turning bullish, I closed the entire bearish position in home builders. And that is again a way I am probably different from some other traders. Others may be turning bearish on home builders now. I did not buy home builders. I didn't turn bullish on home builders as such, but I booked profit on my entire position on home builders. If it gives another trade setup in the coming days, I will be happy to short again if it is a bearish setup. But for now, I closed my long position, and without this sector industry stock advance decline breadth, I would not be able to do so accurate decisions probably. Now let's look back. 1 month period is now very bearish, 10-day very bearish. Those are long-term views. Medium term, weekly, 5-day view, very bearish, isn't it? All are very bearish. Today also very bearish, but Friday had very sharp reversal. And we saw lots of reversal signals, be it indecision at the low, be it green candle low, be it bullish headwind, be it trend line support. So this is a time to look for buys. You could look for reversal setups. Remember in Finder we saw a huge percentage of bullish reversals, 99%. We could look for reversal setups. Another approach could be that the market was coming down, but look for stocks that were not coming down and look for a trend following long setup in them. Both are valid techniques. let's let's find some stocks. I shared the two stocks. Let me explain exactly how I found those stocks. The two stocks I shared. Oh, sorry. I have to. I have one more reason why I didn't look at the market entirely. I'll come back to stocks. Allow me another few minutes. Another reason, and this is a very important piece of my deciding preferred trading direction. The market breadth total view charts. And here I am showing the breadth information for Dow Jones Industrials, Russell 2000, Nasdaq 100, S&P 1500, S&P 500. None, none of the signals on these charts are about one stock. They are about internal health. And one thing that works like a clockwork is the 3-month new high-low oscillator. When it hits the upper threshold, some stocks invariably reverse. And we could drill down to those stocks using Q index. Q index allows us to do constituent analysis. We could drill down to the constituent stocks that are giving short setups when 3-month new high low is at the upper extreme. Similarly, when 3-month new high low is at the lower extreme, we can drill down to the constituents using Q index and see which one of them are giving buy setups. Right now, Dow Jones Industrials is at lowest extreme, very oversold. Russell 2000 very close to being oversold. Nasdaq 100 very close to being oversold. S&P 1500 you may say at oversold level, and S&P 500 is also at oversold level. So again, like I explained earlier, we could look for reversal trades for the ones which were at a lower level, or we could use the approach that if some stocks did not come down and the overall market is oversold, let's look for trend following trades in the stronger stocks. So this is a reason, very good reason to turn bullish. The 3-month new high low is at oversold level for most of the market indexes. But I would also like to look at the chart. I look at every market recap, that is the market breadth total view for the USA market. There also the 3-month new high low is at the lower extreme. That is too oversold, reason to look for buys. Now look back again. When we had series of bangos, then Hindenburg warning, Phoenix signal, Hindenburg confirmation, I was taking bearish trades here. And now others may be turning bearish, but I am turning bullish because of the oversold condition and for so many reversal signals that we saw. So those are the reasons I turned bullish on Friday. Now I shared two stocks also. Let's look at them. I shared two stocks. One is SF. I shared it during the weekend, today actually. Two stocks, SF and SFM, happen to have the same first two characters, the first two letters. SF, what setup did it give? It gave a breakout setup at trendline support. So it gave a triangle breakout, valid breakout setup, also had bullish flow. This is SF. And then we have SFM, also gave a breakout setup with a bullish flow. Both of them gave proper breakout setups. And remember, I mentioned we could look for reversal trades. QFinder shows 99% of setups are bullish reversals. Of reversal, 99% reversal bullish. We look for reversal trades, or we could look for stocks that did not fall much and that are giving a trend following setup now. These two stocks fall in that stronger stock category, SF and SFM. And if you wanted to buy, what I mentioned in the tweet, if you had to choose one, if you wanted to choose only one, which one would you choose? A sensible way to decide that is to find out which one has a stronger industry and better fundamentals. And Q systems allow us to do that. I will do that, show that now. But how did I find these two stocks, SF and SFM? Let's go back to Q Finder. The Friday's technical breadth was bullish. So I went to the bullish signals, and we have certain patterns that people like to trade. 4 patterns. Then we have multiple trade setups. Then we have percentage change and the symbols. One pattern that many people like, including a very well-known person, Mr. Mark Minervini, is stocks moving out from a squeeze. So we have 5 stocks that are having squeeze move pattern, and SFM and SF are actually 2 of them. That is how I quickly located these two stocks. I looked for a pattern I like to see. There were only 5. I looked at all these stocks and I decided to shortlist technically SFM and SF. Now let's look at their weekly, daily both. SF weekly has a very bullish shape, and we have a breakout setup from the yellow direction line with bullish flow. Am I missing something to read in the chart? A better way would be to use Q Global, better in some way, especially for newer traders, newer Q traders. Let's look at SF. I am opening the same stock using SF, and I am going to open the commentary. Commentary is a valuable program that reads the signals on the chart, and let's read it out. At the top it tells what are the available setups, then it tells about the patterns, and further down it will tell about the signals. So now we see that SF not only has a breakout setup, it in fact has a breakout setup, a trend following flow setup, and a pullback setup. 3 setups. So that's certainly a very strong technical candidate. In terms of pattern, it has a squeeze move pattern as well as a fan out pattern. So both in terms of pattern and setup, it is a definite technical buy setup. And if we went to the trend analysis and toolbox analysis. I'm just scrolling down, you'll see lots of greens, no red, so it's all bullish in terms of signals also. In any case, in terms of setups, patterns, it's bullish enough to buy. That is SF. Let's look at SFM also. This is exactly how I choose one from multiple stocks. SFM. In terms of chart, it is giving a breakout with a bullish flow. It is also recovering from the yellow direction line. The recovery started one day earlier. The weekly shape is bullish and it is much more bullish than SF. Let's look at the commentary. It has not only a breakout setup, but in daily it has a trend following long setup, though the weekly is not bullish, so it is not entirely true. In daily it has met all the requirements for the flow trend following long setup, but the weekly does not meet it. So we only have a breakout setup here with bullish flow with support from yellow direction line, good enough reason to buy. And if I look at the patterns, it also has, similar to SF, a squeeze move pattern, a fan out pattern, and unlike SF, it is at price extreme high. Let's look at the chart again. It is actually at price extreme high. It is at price extreme high, but that shows it is a very strong stock. It is giving a very bullish signal. So technically both of them are very buyable. There is no reason not to buy any of them if I am just a technical trader. But I am not just a technical trader. I have other systems. I can align more factors in favor of my trade, and I am going to do that now. Let's calculate their scorecard. And you know, in QVital you could use the root stock to calculate one stock scorecard. We could use a universe from the universe tab to calculate scorecard, or under watch list column you could simply type the symbols. So I'm going to do that now. Type SF and SF SFM.O, two of the symbols. It's going to retrieve the data from Reuters, Refinitiv now, and calculate the scorecard. Give it a few seconds. Both of them are bullish, that is expected. They both have proper buy setups, breakout setups. Now we look at their scorecards. Yes, they are in different industries, but look at the scorecards first. SFM is undervalued, SF is not. In terms of earnings growth, SF has negative earnings growth and deteriorating earnings growth from the previous quarter, whereas SFM has reasonable earnings growth and slightly improving earnings growth from the previous quarter. So whether I look at valuation or at earnings growth and the change in earnings growth, I favor SFM. Another important thing to use, at least I use it, especially when market was bearish just a while ago, whether funds are buying. Both of them are passing that criteria. But in terms of the important factors that I decide to buy or not buy in terms of fundamentals, both of them are favoring SFM. Now let's look at their industry strength. Very important to make preferred trading direction decision. Food retail, instantly we can see from the color coding of the industry scorecard, SFM, that is food retail stock, much stronger. That industry is much stronger, not only stronger than the other industry, that is investment banking and brokerage. Food retail is in fact one of the top 20% of industries, and you can see in terms of percentage change also is up by Mammoth 2% on Friday, whereas investment banking and brokerage very small percentage up. So in terms of industry as well as in terms of fundamentals, I decide on SFM, not SF, though technically both are giving acceptable buy setups. And if you ask why my trading success percentage success rate and probably PNL percentage also higher than many other traders is because I have access to these systems and I actually use them in real time. Everything done in real time. I can make robust decisions fast and I act on them at the same time. Not just show it on YouTube sessions, not just post on Twitter. I actually trade on them and that is helping me quite a lot. And all these examples I share, they are public before knowing the results. That also shows the confidence I have on the system. That confidence is important. To be able to use a system over and over, you have to build a confidence. I hope these sessions are helping in that. Now I have 10 more minutes left before 1 hour. Why not use them? Let's do a top-down analysis. I don't have time enough to do all kinds of analysis in every session. Let's use a top-down workflow. Let's look at the sectors. Look at the sector scorecard. We could choose the strongest sectors in terms of strength or we could choose in terms of acceleration, that is pace. So we would end up with either energy or consumer discretionary or industrials. We could look at all of them. Remember, Dia had trendline support, so I'm keeping industrials. But if I had to choose only one sector, let me, it's like again come into my trading room to copy the phrase from Dr. Alexander Elder. If I had to choose, I do not have to, but if I had to choose, actually I would not mind buying energy stocks too. So with that caveat, if I had to choose only one sector based on this scorecard, I would choose consumer discretionary because that is both in the top 20% in terms of score as well as in terms of acceleration. But I don't have to do that. Energy is also good enough because it is top 20% in strength. Industrials is also good enough. Good enough means they will give me profitable trades. That's what will matter in the end. So let me drill down to these sectors only. To what? Not to stocks but to industries. Let me look for the strongest industries in those sectors. I could do based on acceleration also. If I find enough trades, why don't we do that? We highlighted the strongest 20% of industries, and let me explain how we could also further fine tune to look at the industries that are not only among top 20% of all industries in terms of strength but also in terms of acceleration. So let's drill down to this refined industry list. Let's go to S&P 1500 stocks to save time. So these are the stocks. Let's see the stocks that are up by at least 1%. I am now left with 32 stocks. So from S&P 1500, very quickly I came to 32 stocks. What are they? They are in the strongest sectors, either in terms of strength or acceleration, and they are also in the strongest industries. How strong industry? Both strong as well as most accelerating. 32 stocks. Let's look for at least one star candidate because market was very bearish just a while ago. Now it has a sharp reversal on Friday. I am okay to look for one star candidates that are either undervalued or having high earnings growth. I'm not going to open their charts. I'm going to simply look up their technical setups from QFinder. Let's look at these two stocks. I'm going to close the existing Metastock charts. Click the chart button. Okay, if Metastock is not helping, no problem. Sometimes during the market recap, Metastab hangs because I have too many programs running, including live streaming. Let's look at the stocks using QElite, AN and ASO. Okay, AN. AN, a consumer discretionary sector stock. That sector is accelerating as well as very strong. However, though the stock has bullish flow and is at trendline support, it has a trendline resistance immediately above it. So I'm not going to buy it. It can go into a watch list. I can buy it in two ways. One is it comes to the trendline support. Using fine-tune chart, I can see that it is holding the support. I can buy it right at that point. Or if it is breaking above the resistance, again using fine-tune, I could look at that and I could buy it using fine-tune. Or in case of breakout, I could also use it end of day. In case of support also, I could use it in end of day. But if I have fine-tune, if I'm able to watch it for a while during market hours, I would like to look for a breakout or support using fine tune, but not as of Friday's close. Okay, so AN was not a stock I would buy on Friday's close. What about ASO? Okay, my meta stock is back up. Interesting. And this is not unusual. We see that this stock is also going up from trendline support, but it has a trendline resistance. That is very usual because market was falling for several weeks. I expect many stocks to be below trendline resistance and some to be inside a triangle. And that again shows how strong, relatively speaking, SF, or rather, let's go to SFM, that is my final pick after looking at industry and how strong this is. It has no trend line resistance. It hardly fell from the top, didn't fall much. It gave a support, got the support from Hillary. So SFM is very strong. So we got two possible candidates from top down, but they had trend line resistance. So I wouldn't go for them. I would rather go for SFM. Now let me do, I have 2 more minutes. Let's do another workflow. So I already showed bottom up workflow starting with Q Finder. I found SFM. Top down, I could continue with top down to find some more stocks, but I'll not do that. I am now doing the third workflow, that is fundamental first workflow. And let's use liquid mid price stocks. Liquid mid price, they tend to move a lot when they move. I need liquid stocks. I could go for high price. They move relatively less. I could go for low price stocks, but they are more speculative. So liquid mid price stocks is in the right place for swing trading. So I am doing now a fundamental first workflow. Now in real life, which one do we use? There are certain circumstances when you may start with fundamental first. There are some circumstances you may start with technical first. And I made a masterclass video on workflows. I detailed that there. So you could use them from them different workflows at different times. So I'm generating a scorecard of this liquid mid-price stocks, retrieving data from Refinitiv. Give it a few more seconds. Now I'll demonstrate. I think I'll be able to demonstrate why I look at fundamental scorecard also. See, of the liquid mid-price stocks, 62% are up, 37% are down on Friday. Let's go to their scorecard. Let's click on one green star. Remember this percentage, 62% up, 37% down. Let's say 62% up. We are looking for bullish, 62% up. Now I'm clicking on green one star. 62% up, now improved to 64% up because I inserted some fundamental criteria. Let's click on 3-star. Now 64% went to 68% up. What happened? I added some more condition. 1-star is either undervalued or earnings growth, and 3-star is undervalued and earnings growth. And as I apply these fundamental restrictions, I see percentage of stocks going up is increasing. So they are of value to me for swing trading decisions. Let me change to diamonds, where the stocks are undervalued, having earnings growth as well as having revenue growth. And now you see the percentage of up stocks have gone up even more. We started with 62% up on the whole universe, and we ended up with 73% up. Let's look at the stocks that are up by at least 1%. All of them are of course up. Let's look for technical setups in them. I have several, 3 precisely. I'm going to look at only these 3 stocks. I made a mistake. None of these stocks have a trade setup. They have pattern but not setup. So when I looked at the chart, I was wondering why it is showing me as a stock having trade setup. It does not, and that is because I made a mistake. Actually, it is only showing a pattern, not a trade setup. Fine. So I didn't find any trade setup from these stocks. Remember, the market was bearish. So what were these stocks? These were fundamentally strong stocks, diamond category. So let's remove them. Let's go back to only 3-star. So less restriction. They may not have revenue growth, but they have earnings growth and they are undervalued. Again, do the same thing. Look for their technical setup. Now I find multiple technical setups. Okay, let's look at them. Step-by-step method to find trading candidates. You could use Q Elite Finder or Radar also, but I am using Q Global now. Q Global can be used for the USA market as well as global markets. So this is TAP. TAP is giving a bullish headwind reversal signal. We saw from Q Finder 99% of reversal setups are bullish and TAP is one of them. Okay, let's look at the other stocks. Doku, it has one breakout, but it has multiple more trendline resistances nearby. Not going to consider buying it. Close Doku. TIMB, inside the triangle, has trendline resistance nearby. Not going to buy it, though it has a bullish flow. Bullish flow is not enough. If it is near trendline resistance, I am not going to buy. Close it. BAK also has a bullish headwind reversal setup. Let's skip it for now. NCR has a bullish flow, but it is already at the upper boundary. Not going to buy it here. I would have bought here. In fact, a very strong stock. Though it came down little bit, immediately recovered. This would be the last buy point using bullish flow setup. There is a flow here but already at upper boundary. There is a flow here but already at upper boundary. And again it is happening here and here. So I would like to buy with bullish flow setup when price is at a lower level. That was the buy setup, not now. Close it. NBIX also too close to the upper boundary. I'm not going to consider buying it. IRWD pharmaceutical stock. This has a box long setup. This I may not mind looking at. Has multiple watermark, pivot support, bullish release, bullish pressure, high volume at price extreme low. That is a lucrative buy point, and it is moving sideways for a long time. If options are liquid, these are the kinds of stocks I would like to short put on or use short put vertical. In fact, it is at jump thrust low, nearing jump thrust low, another reason to buy it at this lucrative buy point. So I am left with three stocks: TAP, BAK, and IRWD. But I did not look up their industry score yet. So let's do that. We looked at fundamentals, we looked at technicals. Let's look at BAK, IRWD, and TAP, their industry score. So IRWD, BAK, and what is the other one? IRWD, BAK, TAP. These three stocks, look up their industry scorecard using QEdge. Biotech is one that I would like to have. Brewers is actually not strong in terms of industry score or acceleration. So I could look for either commodity chemicals or biotech, which would mean IRWD or BAK. So let's look at them using weekly daily. IRWD, Ironwood Pharmaceuticals. Yes, certainly a stock I like to buy. Instantly I can decide. Now I have found another stock that is in a strong industry, improving industry, great fundamentals, and right at weekly trend line support, right at daily pivot support, giving a box long setup. This is different from SFM, isn't it? SFM I found a trend following setup, and here I found a reversal setup, but both are having high success rate. And the other one stock was BAK. BAK made the requirements for headwind setup on daily but not on weekly. So BAK is not a finalized trade setup. So I ended up with two stocks: Ironwood Pharmaceuticals, IRWD. Go back to that again. Why don't we look at it using the momentum signals also? But I don't expect momentum signals in IRWD because it is a reversal trade. Remember, the momentum signals were designed for stocks that were already moving up, not at the very bottom, not usual. Some of them like green candle low may come, but not many of them were expected, and in fact on Friday there is no momentum signal at all on the bullish side. But that's fine. Q setups don't rely on the momentum signals. So IRWD is a buy box setup, and IRWD, and the other one was BAK. Sorry, SFM. Sprout Farmers Market, that is a breakout come flow setup. Now let's look at, I showed them on Q Finder, on Q Global. Let's look at Q Finder before I close today's session. Let's look at them using Q Finder on TradeStation also. SFM and IRWD. IRWD gave a box long setup, that is a sideways market buying at the lower edge, very effective setup. In addition to that, it is at jump thrust low, price extreme low. That is a very lucrative point to buy. It has very bullish activity plus bullish pressure. Whereas SFM, it has multiple patterns, squeeze move as well as fan out patterns, and it has a trend following setup, multiple of them, breakout as well as bullish flow. It has bullish pressure as well. It has some momentum signals, Mobo breakout and Kahuna. So I came to Q Elite Finder to demonstrate that you could use Q Elite as well to look for these trade setups. You could use Q Finder on Q Global, that's Metastock as well, to find the technical setups. For technical analysis, both are equally effective, and for fundamental scorecard analysis and industry scorecard analysis, you may use Vital and Edge respectively. So I found at least two buy candidates where industry, fundamental, technicals all are aligned. Now what I'll do, I'll keep an eye on them on Monday. I did not buy these stocks on Friday. On Monday I may keep an eye on them, and if they are moving in my preferred direction long side, I'll use the fine-tune chart. In fact, if I noticed SFM, you can see SFM here. If I noticed SFM on Friday, this would be the perfect time to buy on the 5-minute chart, but I did not, so that's fine. I can buy the day after signal day, that will be Monday, by keeping an eye on SFM using the same fine-tune chart. In the morning session, I'll use 5-minute interval. I'll keep an eye on both of these stocks. There are probably many other buy candidates. If you just looked for technical setups, there are many. We saw SF was also one, but I like to align other forces also. So I found two, but using 360 degrees analysis 2, you could find many more buy candidates now. They are all at low risk points. They are lucrative buying opportunities in my view. And that is how, once again, I shorted at the top when others did not notice. And now others are probably turning bearish, and using not my gut feeling, but using proper methodical analysis, I am turning bullish and finding stocks with low risk. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session, most likely next weekend. You will come to know from my X, that is Twitter page, or from my YouTube channel if you are subscribing there. Have a great weekend, and as these live examples show, as I always say, there is no reason not to do that. Trade profitably. Thank you.